Debbie Marcoux is licensed by the California Department of Business Oversight under the California Residential Mortgage Lending Act, NMLS ID 237926. Also licensed in Arizona, 094-1504, Georgia 69178, Illinois 031.005-8339, Nevada 57237, Oregon, Tennessee 184373, Texas, Washington, MLO 237926, Heidi Slade Points, California, DBO 1666881.
She's the mortgage mom. She can get things done. When you're in need and don't know where to go, pick up the phone and call Mom.
All right, well, welcome to Mortgage Mom Radio. I'm Debbie Marcoux, and I don't have Heidi Schlegel Points today. She is not feeling so good, so I have got the mortgage dad, Larry Ehrlich, on with me. How you doing, Lair?
Good. Thanks, Debbie, for having me on.
Of course. Thanks for filling in for Heidi. I know she doesn't feel good, so she's going to be very appreciative to you. But we've had you on lots of times, and you're always, you're fun to have on because you've got so much information. You've been in the business for a really long time. You've got a good thought process behind, questions that I ask you. So I'm actually happy that you could jump in today. I really appreciate it.
Oh, it's cool. No, I'm happy to do it.
Yeah. So I want to ask, this is usually our catching up with mom time, and I just want to let everybody out there that's watching know if you guys have any questions whatsoever, go ahead and throw those into the feed. We will answer those for you. If you're listening on Saturday morning, if you guys want to get in on this live, you've got to watch us Wednesdays live at 5. We are on YouTube and Facebook and Twitch. So find your favorite outlet and find Mortgage Mom Radio. Make sure you subscribe to the channel and turn on your notifications. If it's Facebook, like the page. One thing I learned about Facebook, I don't know if you know this, Larry, but if you subscribe to a channel and you turn on notifications, you have to actually hit all. So you've got to click that bell button twice and click all, or it won't actually send you every time that they're live. Did you know that?
I did not know that.
I've been really big into cryptocurrency lately.
Yeah.
It's kind of been my new thing. I know everybody's talking about it and everybody's trying to get in on it, and I'm just trying to learn about it. And so I've subscribed to all these channels, and I couldn't figure out why I wasn't getting notifications when they would come on. And then I finally heard one of them talk about, you got to make sure you click on that bell button, then you got to click it again, and then you've got to hit the all, or else you won't get it. So just want to make sure everybody out there listening knows. You guys want to know when we go live. It's every Wednesday at 5. That is Pacific time. What are we right now that we're in the backdrop, lost an hour? Are we really considered Pacific time? I think it's something different, isn't it? PST,
well, no, we're still Pacific time.
Yeah, but
it's Mountain time, but
yeah.
We're Pacific time.
All right. So, yeah, but somebody was trying to tell me it was called something different. Like there was Pacific time, and then there was PST, and then Matt, do you know? Isn't there another one? All right, we're going to look it up and know next week. Anyway, so we've got a couple of questions. We've got Erica Joy watching us. Thank you for watching, Erica. Appreciate it. She says, don't forget to like the video if you're watching. Thank you, Erica. Love that. Got to make sure we tell everybody, like the video. It helps our algorithm. It makes sure more people sees it. And is that the same as Bitcoin? Yes, cryptocurrency is Bitcoin. So just trying to figure it all out. Me and Larry had a conversation the other day. He was talking all about his XRP and Litecoin, and we're starting to get in on it and figure it all out. We've
Carrie just chimed in, said, hi, Debbie and Larry. Forgot all about me.
Carrie. We did not forget about you.
We didn't forget you, yes.
Yes, absolutely. We love Carrie. Carrie's amazing and part of the team as well. And so next time, Carrie, I kind of figured last minute, she is a mortgage mom as well. And I figured last minute with 7 minutes to go, and I've got to find somebody that's going to help and jump in for me and be a co-host, that I would definitely call Larry instead of Carrie, who's got little tiny babies at home. She's been working from home, so she's probably not put together. She's probably got vomit on her shirt, maybe a little bit of blood from one's taking a spill. I know that happened, I think, yesterday. So, definitely, Carrie, we will get you on, but I will give you much notice, just tons of notice to be ready for that.
Right.
All right.
And Dad popped in, said, hi, Bug and Fuzzy.
All right.
Fuzzy would be me. And then Carrie said, sorry, Matt. Hi.
Love it. So again, if you guys are out there, if you're watching, you guys have questions for us, please feel free to put your questions into the feed. Let us know you're here. Say something so we know you're on and we can say hi. And if you are listening on Saturday morning, make sure you guys watch us. We're live at 5, YouTube, Facebook, or Twitch every Wednesday, and that is 5 California Pacific Standard Time. Pacific whatever time, whatever they
You're
call
right,
it these
Pacific
days.
Standard Time. That's what it is.
All right. So
Good.
big news this week, Lair, and
Yeah.
I've got it in front of me. I'm not going to hold you to knowing the numbers because it just came out, but they increased our loan limits for 2021.
Yeah, that's really good for a lot of people, especially first-time homebuyers, because prices have gone up and everybody can see that. So this allows what used to be a jumbo loan is still now a conforming loan in a lot of different areas. So it's nice when that happens for everybody.
Yeah. And they made a huge jump this year. I feel it like it was actually bigger than it was in the previous years. Last year, I remember doing this show and saying, oh my goodness, they made such a huge jump. This is awesome. And this year, I feel like we got even more. We went from, and this is going to be giant for Riverside, San Bernardino, the counties that don't have the high balance loan limits like Los Angeles and Orange County. These are really going to help because before you were stuck at 510, 400 and you could not go above without going into a jumbo loan. And, jumbo lending is there and you can absolutely go higher than that, obviously, in those counties and those areas. But jumbo loans are more difficult to get approved. You need larger down payments, lower debt to income ratios. You need to have higher credit scores, it reserves, it just is much more difficult. Hey, Matt, I'm hearing some echo. Are you hearing echo?
Yeah. I was wondering what that was. Larry, there isn't anything playing in the background on your end, is there?
Let me go look. Give me 1 second, because there probably is at my house.
Yeah, because
Okay.
I thought it was me at first.
But I thought I was hearing myself, so that's why I was thinking it was some sort of loop or echoing, but that's okay. So I'm going to keep going while Larry's figuring that out. So we have now moved from 510, 400, which is 2020 conforming loan limit, and we are now at 548, 250. So this made a giant change. So think about, if you're out there and you're looking for something that is, 600,000 or 575,000, and you had to try to get that loan amount down to 510, 400. Now you've only got to get down to 548, 250, which is huge. In Los Angeles County and those high cost areas, we can actually go up to, let me find it. Got to find Los Angeles. We can go to 822, 375. So that was a
The
huge
biggest
jump.
Jumps. Yeah.
Huge jump. I mean, Lair, what was the number that we had this year, 2020, high balance?
765.
That's right, 765, 600. So to
Yeah,
jump
it's
all
a huge jump.
Yeah, it's huge. At 822, I worked it out for somebody today, and if they had 10% down payment, they could buy a home for $915,000 and still get into that conforming loan limit. So it just makes such a huge difference, especially as property values are going up, like Larry said. Just a big difference as far as how much cash out of pocket that you're going to need to be able to get into that home. Now we're anxiously awaiting, and I know Carrie's watching right now, and she keeps asking me since yesterday, a couple times a day, we're anxiously awaiting those numbers for FHA. So they have not said anything about FHA yet. We are still waiting to hear what those loan limits for FHA will be. So, FHA, depending on the county, it does change. Their loan limits change. So right now in Los Angeles County, Orange County, high cost areas, FHA will actually go up to the same number as Fannie Mae and Freddie Mac, as the conforming conventional loans will. But when you look at lower cost areas like Riverside and San Bernardino counties, they don't actually allow you to go as high as even the current 510. So we're anxiously waiting to see what FHA does in those areas, because let's face it, Riverside and San Bernardino counties are really not low cost anymore. The fact that they don't have high balance is really quite frustrating, because those homes really are going up in value. Even Kern County is starting to get more expensive. San
Right.
Diego County, we didn't actually have the complete full capacity that we did have, or Ventura County, we did not have full complete capacity that we had in Los Angeles or Orange. So,
Orange.
I'm going to look up Ventura County right now to see where we get to go there. Now, let's see. There's so many. Let's see. Ventura County, we can now go to 548. We've got. That doesn't. Oh, wait. No.
Well, while you're looking at that, real quick, let me just jump.
739 450 is where Ventura County is going to go. So they're not going to let us go all the way to the 822. But still better than where we were. That's for sure.
Yeah, it's an improvement.
Absolutely. What do you got, Matt?
A few more comments. Carrie said, deal, I'll be there. Fabiola over on Facebook says hi. And Carrie let us know that she doesn't hear the echo that we're hearing. And Deborah on Facebook says hello.
All right. Well, thank you so much, Fabiola, Deborah. Appreciate it. Carrie, keep watching. And yes, I will definitely give you some heads up warning. I won't do this to you, and I won't throw you at last minute and not tell you what we're even talking about, like I did to Larry.
She didn't even give Larry a chance to do his hair.
I did it. Larry's like, well, I guess I'll comb my hair. Well, we're all working
You
from
didn't give me
home.
hands.
Yeah.
I had to comb both of them.
Oh, and
Wait.
Aunt Lori says hi.
Ah, look at that. I've got the whole family on. I love it. So yeah, you didn't have to put on pants because obviously we're still Zooming, right? So
I didn't know it was that kind of show.
well, everybody needs to wait around for Mortgage Mom Radio After Dark. So our new extended version that goes after the hour show that reruns on Go Country Saturday mornings, we go Mortgage Mom After Dark, and then that's when we really, take off the bras and let loose. So anyway, so big loan size changes. If you guys want to know what they are for your county and how it's changed for you, please feel free to reach out, give us a call. Larry's got the whole list. I've got the whole list. You can ask for either one of us. We'd be happy to tell you where you're at now. Really might help a lot of people. I've got a client that I talked to and I need to call her. But I talked to her actually last week and we talked about doing a refinance for her. And when she bought her home, she brought in the money to get to 510 400 for her area. Since the time she bought the house, her credit score's gone up. So she's wanting to refinance to get a better interest rate. Well, when I run the numbers, by the time that we're done with, closing costs, and she really just got that loan, a couple of months ago, she would have had to bring money in to do the refinance. Now with the higher loan limits, we would actually be able to do the refinance for her without her having to bring in money. And just last week, I told her, no, I couldn't do it. So anybody out there that is listening that thought you were stuck at that 510 400, this is your opportunity. This is your chance. Jump on it. Interest rates are still great. If you've been thinking about purchasing, I know, Larry, I'm sure going through your head right now are a bunch of people that you could think of that this is going to definitely benefit.
Yeah, it's safe, because rates tend to be higher when you go into that higher cost area. So I just had a lady yesterday who we were going to lock a couple days before, and we waited because we had some insight that this was coming. So we waited, and she actually saved about $5,000 in closing costs because of the difference in rate. So because she was conforming now instead of high balance or high cost area. So it's really beneficial to a lot of people, and she was really happy that we waited.
Yeah, absolutely. And I know that people are listening to this show on podcasts. They're watching, YouTube from all different states. And obviously I'm licensed in many, many states. I'm referencing a lot of the counties that are near us where we live in California, because this is where we do a good portion of our business. But obviously, if you guys want to know, what your loan limit is and what we can do to help you, just give us a call and we can let you know. And we've got, oh goodness. All right. I'm going to try to read all of these off, all the states we've got right now at this point. So I've got California, Arizona, Nevada, Washington, Oregon, Texas, Tennessee, Georgia, Illinois, Florida. Carrie, pop in, type something in there if I missed one. If I missed one of those states. But those are the states that we are licensed in that my team can help you in. So if you are living in one of those states and you're wondering if these loan limits could benefit or help you in any way, please reach out. Please give us a call. We'd be more than happy to help you. If you're in the middle of a purchase or a refinance and you thought you were going to have to bring in the additional money to get to the loan limit, talking to your loan officer, and you don't need to do that now. So definitely reach out to them and see if they can help you. And if they can't, give us a call. So, we'd be more than happy to help. The number here is 844-935-3634. Give us a call. We'll get you on the calendar. You can talk to me. You can talk to Larry. You can talk to Carrie. And if Heidi's feeling better, you can talk to Heidi. So whoever you want to talk to from the team, you're more than welcome. Obviously, Larry's on doing me a huge favor today. I appreciate it. So everybody reach out and ask for Larry. And let's get Larry's calendar busy and full.
Over on YouTube, I've got Javier asking, do these loans apply if I want to buy land and add a manufactured home as a package?
Okay, so buying land is different. That you'd have to actually you'd have to do a lot loan if you want to buy the land. If you want to build on the land or put a manufactured home on the land, you're talking more of a construction loan. Those loans I don't personally do. So number one, we work for Movement Mortgage. Mortgage Mom Radio is my advice education channel. We work for Movement Mortgage as loan officers, and we do not do lot and land loans. So the only bank that I personally know of that is doing those is U.S. Bank. Larry, do you know of any others that are doing land lot loans?
No, I don't. U.S. Bank seems to be the one, and it's 20% down if it's a lot loan, assuming that the utilities are in. If it's not, I believe they want 25% down.
And then construction loans we can do here at Movement Mortgage. I don't personally do them, and I would actually refer you off to somebody that does. I really feel like you have to be good at your craft, and you can only be good at so many things. Construction loans they're a different animal, a different beast. There's a lot that does go into it, and I would not feel comfortable putting one together when I've never personally done one. So, Larry, I don't know, have you ever done construction loans?
Yeah, they are difficult. I haven't done them in a while, but what we do is rehab loans. So if you're buying a house and you want to fix it up and you want to include the cost in doing that, we do those, and Debbie and I are experts at those. You could do them FHA or conventional, and those are really good if you want to do some remodeling or you want to add a bedroom or a bathroom or something. Those are really good loans, and we can do those and help you with those if you want.
Yeah, absolutely. So the rehab loans, the Fannie, the Freddie, the 203Ks with FHA, we can absolutely do those. But a construction loan, like I said, we would get you referred off. I know U.S. Bank also does do construction loan as well. There's a lot. There are actually more banks, I think, that do construction over the lot land loans. But your best bet would be to probably reach out to one of them. The other thing is, if you're going to buy a manufactured home and put it on land, I'm going to guess that the company that you're going to buy that manufactured home from probably has some financing or a hookup or a connection or a referral to where they would typically send their clients for that. And that might actually be your best bet. We're here to give you the education and advice. We're not here to take every single possible loan we can and put you into a situation where we're not doing the best for you and for our clients. So, that in that situation, I would say we're probably not your fit, and, ask where you're buying that manufactured home from, where would they send you? So, the 203Ks, Larry, we haven't talked about those actually in a long time. So I'm happy that you actually brought those up. They're great loans right now, especially with property values having gone up quite a bit. It makes it a little bit easier to be able to fit in that rehab. And a lot of people are staying home. And we've talked about that on the show quite a few times here over the last few weeks that, a lot of people are doing, construction at their homes because they're spending so much time there that, you want to be happy where you live, right? So talk a little bit about the different, rehab programs and how they work.
Yeah, the rehab program, it's really good. Let's say you're buying a house and sometimes, the seller goes, well, you're buying it as is. And you go into the house and you love the location. It's, close to your kid's school and it's everything that you want it to be, but you look inside and go, wow, this thing needs some love. So those are really nice loans. And sometimes, sellers go, well, you're buying it as is. We're not fixing anything. So if you buy a house as is and you're going, sometimes the agent's going, well, you're going FHA. I'm not going to sell you this house because it's not going to pass inspection. Well, you can take this kind of loan and buy those kind of houses. You can buy fixer-uppers. You can remodel the kitchen. You can put in new kitchen cabinets, new appliances, remodel the bathrooms, add a bedroom, whatever you want to do. These loans really make it easy for you, and you don't have to have the money, which is great. because, you buy a house and you're saving every dollar you can just for down payment. These homes allow you to finance the repairs or remodeling or whatever additions that you want to do. And it's a great way to make the house yours and buy a house that you normally couldn't otherwise buy. So it's a great product. And you can walk in, and even if everything's nice and it's okay, but it's not your taste, you can still do a rehab loan. It's not just for repairs. It can be just for remodeling. Like, well, the kitchen's okay, but I want granite countertops, and I want new appliances, or I want to change them from electric to gas, or whatever. So you can do all those things. Or I want to put in hardwood floors, or I want to add a bedroom. All those things can be built into the loan, so that you can make the house yours, and which is what we all do. As soon as we buy the house, I want to paint this room, I want to do this, I want to do that. So it allows you to do that, and you don't have to come up with the money for doing that, because obviously, when you remodel, it's expensive. When you start adding things on, or redoing the kitchen or redoing the bathrooms, it's tens of thousands of dollars, and most people don't have that. So it's a nice way to get those repairs financed, and it's rates are really good on that, and you can get it and make the house yours the way you want it to be.
Yeah, absolutely. And what's kind of cool about it, and I'm going to let you, since you're the one that brought it up, I'm going to let you talk about it. Okay. So if I'm going in and I'm buying a property and, it's just a doghouse, I walk in and it's shag carpet and it's still got, green appliances and, wallpaper, wallpaper all over the walls, and it just needs to be updated, and I want to do all of these repairs. So let's say that I've got, I don't know, $40,000 or $50,000 in repairs, but I'm getting a steal on the price of the house because it's going to sell for a little bit less than that house that's already been remodeled. So talk to them a little bit about how do we come up with how much money that they actually need for their down payment.
So what you want to do is, when you go into the house and you look at it and you go, I want to do these things, whatever it is, remodel the kitchen, remodel the bathrooms. What you want to do is have your contractor go in there with you and give you an itemized list. Here's what it's going to be to remodel the bathroom. Have them list all the repairs, the remodeling, the labor, the equipment, whatever is needed, permits and all that stuff. And once you have the contractor's bid, then how much it's going to take. Like, it's going to be $50,000. Okay. Now FHA will allow you to finance that whole 50. They're going to even put in for 10% for reserves, and make sure you have all the money out for permits. And then what FHA is going to do is they're going to have sort of like a HUD inspector come out, and he's going to look to make sure that everything is done and that you're doing everything, all health and safety things are done, because you want to make sure that your electric up to date, your plumbing's up to date, all the codes are, up to date, because you want it done right. And FHA wants to make it sure, and same with Fannie Mae, they want to make sure it's done right. So they're going to make sure that all the repairs and remodeling is done that you want, and plus anything that needs to be done to make sure it's up to code is also done there. So you're not on your own. You're not on an island. You have this FHA inspector, so to speak, that's with you, and he's going to help you and guide you through that process, as will we, to make sure that everything's being done that you want to get done and that needs to be done.
Right. So let's say, for example, the house next door is, selling for $500,000, fully redone, completely remodeled, and you're able to get your hands on the house for $450,000, and you want to put in $50,000 in repair. So what we're going to do is we're going to take your repair work, your bids, like Larry talked about, from your contractor. We're going to take your bids and we're going to add them to the base price of the house that you negotiated that house in its current condition for. And now we're going to say that your actual cost to take on that house is $500,000. So that is where we're going to actually start, is at $500,000, and that is what your down payment is going to be based on. So if you're doing an FHA loan that's 3.5% down, now your 3.5% down is on $500,000, not on $450,000. But think about the difference of what you just saved. Instead of 3.5% down on $450,000 and then having to come up with $50,000 in cash, right? It's a humongous difference as far as being able to get that work done. Now, one of the caveats with that, though, is that we need to make sure that you're not over improving. The appraisal will be done based on the work that you're having completed. So the appraiser will look at all of the bids and everything that you are doing to the home, and will appraise the home subject to the repairs being completed. So we're going to see that that house has to appraise. So if the neighbor sells his house for 500,000 fully redone, and you can get your hands on that same floor plan for 450, then you're probably going to get your appraisal at 500 and you're good to go. But if your appraisal comes in at 475 and your repair costs bring you to 525, well, now we're going to have a problem. So just keep in mind, you've got to negotiate a good enough price on that doghouse to make sure that you've got the money there, the equity to be able to do the work that you want to do. And so that's why what Larry's saying, make sure when you go look at this house, knowing it's going to need these repairs, bring that contractor with you so that they can actually look at the home, take notes, write down what needs to be done, and actually get you a bid. And then make sure that your real estate agent is comping what would that home be worth when you're done with the repairs that you plan to do. So, it's definitely, it's a great program. It truly is, but you do have to make sure you're getting a deal on that price.
Yeah. You don't want to overpay for the home. So you want to make sure that you're doing everything that you want to do and everything that you need to do. But like Debbie said, you don't want to buy it for 475 and put 50,000 into it. And it's only worth 500. So you do want to be careful with that. So you do want to have a licensed contractor with you so that you get a real bid and a real sense of what it's going to take to do it. And the other thing is you cannot do the work yourself. You must have a licensed contractor to do the work.
Correct.
Good point. Because a lot of people, I'm a handy guy, which I am not, but I'm a handy guy. I can do all this work myself. So they will not allow you to do it. It has to be a licensed contractor to do it.
Right. Well, and what's really funny is that Matt threw into the feed, wood paneling needs to make a comeback. And to be honest with you, so the old school wood paneling, I don't think will ever make a comeback. So sorry, Dad. He's jumped in there. He said, yep, but I do have to tell you that, wood paneling is actually kind of in right now, but we're just talking about light grays and, Larry, what is it that they call it? They've got a word for it, where they put up the really pretty wood on the wood paneling on the walls.
I call it junk.
Well, we got some really nice cabins that were all wood finish inside.
Yeah, but that's not what I'm talking about. There's an actual name for it. And by the time that the show's over,
like a laminate?
I'm sorry,
like a laminate or something?
No. It'll come to me.
Carrie says wainscot. Is that?
Well, there's the wainscoting.
Yeah, wainscoting is nice.
Yes,
yeah.
That's absolutely beautiful, and that's what I have in my dining room. Thank you, Carrie. But then they're also using that refurbished wood. It's it's gonna drive me crazy.
Oh, you mean not antiquing, but I know what you're talking about. Oh, I can't think of the word either.
It'll kill me. It'll kill me the whole show that I can't remember what I'm talking about.
Not damaged, but what do they call that?
Yeah. My dad says barnwood, but no, that's not what we're talking about. It'll come to us and we'll be in the middle of a sentence and then I'll just blurt it out. It'll be like ADHD. We'll get onto another subject and it'll come back. But obviously it's just with the times, but so sorry, Dad. The wood paneling's not coming back. And yes, like you said in your comment, you just got to paint it.
But you're not going to address what's wrong with shag carpet?
Yeah.
Cover the hot button issues here.
Right? Yeah, we're gonna leave that one alone. So anybody that wants to know about rehab, guys, it is there. It's available for you. It can be owner occupied. It can be non-owner occupied. Fannie Mae and Freddie Mac conventional loans have rehab loans, renovation loans. FHA does as well. So, if you want to know about those, definitely give us a call. Call the office. It's 844-935-3634. Make sure that you specifically ask for Larry because Larry is going to be the one that's going to help you through those. I've actually done a good amount of them. I know them very, very well. Very, very quite a few. But they are hard. There's a lot of work that does go into them because you do have to get your HUD inspector involved and you do have to get your contractor and your bids and everything put together. And so since Larry brought those up, we're going to let Larry take them. But they are good. They are good. Don't ever let anybody
it's fun to help people get those kind of loans too because they're so excited.
Yes.
Oh, I'm doing this, I'm doing that. It's fun. I like helping people with those kind. It's cool to see them get it and pick out what they want and do everything. It's kind of cool.
Yeah, absolutely. And a lot of people, a lot of loan officers, if you call them and you talk to them about a renovation loan, they're going to try to talk you out of it. And renovation loans are great. Now, there's times where a renovation loan maybe isn't the best bet, right? So a renovation loan is going to be a little bit higher in interest rate, and it is going to have a little bit more in fees. You've got to think about there's going to be some, wire fees for every time that they do disperse money. There is going to be, there's going to be additional cost there. Everything has to be done by a licensed contractor. It cannot be done by, the handyman that, down the road that does a great job, but he's not licensed. So it is going to cost you a little bit more money to do those repairs. So if you're in a home that's got a ton of equity, just a ton of equity, and you're thinking it's time to do some renovations, we may just want to do a cash out refinance, give you your cash, and then you go shop around and get your work done and get it done at your leisure and pay who you want and do what of it you want to do on your own. And, that's obviously going to save you a little bit of money. But if you don't have the equity in your home, that doesn't mean you can't get that work done that you wanted. You can't add that bathroom that you wanted or that bedroom. Or if you're buying a house and you've just got that minimum down payment, that's okay. There's that opportunity that's there. And even though it might be just a little bit more expensive, what you're going to get out of it and the immediate equity that you're going to build from buying low and doing the repair work is very, very well worth it. And you can always refinance when you're all done with it, and get into a lower rate, right? Yeah. So definitely a great loan program. I'm happy that you brought that up. We didn't even talk about it. It just kind of like went with the conversation, and that's where we ended up. So I'm happy. Thank you so much, Larry. That was awesome. And again, if you guys have questions, just give us a call. We'll get you on the calendar. You guys can ask for Larry specifically. He really is great at them, does them all the time. And he is your go-to man on the Mortgage Mom Radio team. So couple other things that I wanted to talk about that I thought were really important, Larry, and then we'll kind of call it a day. Forbearance, that has been coming up a lot lately. And when the cough first started, we talked a lot about how, don't miss your mortgage payments, keep making them. If you don't have to take forbearance, don't do it. And they were just things that we were looking at, educational wise, saying we don't know how that's going to play out. We don't know how it's going to change your financing. We don't know if it's going to stop you from being able to take advantage of something down the road. We don't really know how the banks are going to look at it. We don't really know how credit is going to look at it. Once they put forbearance on the credit report, are we going to start seeing credit scores drop? So it was really something that we were, just basically saying, hey, if you don't have to do it, don't do it. And now we're at a point where there's a lot of people that do have the forbearance going. And I think that one of the, mistakes that the government made, quite frankly, in my opinion, is when they rolled out the forbearance, they did not make you qualify for it. Anybody that wanted it, deferment or forbearance, got it. If you called up and said, I need it, they gave it to you. Whether or not you had lost a job or whether or not you, could or could not continue to make that payment. So we now have people that have forbearance on their current mortgage who are working, didn't lose their job, and haven't been making a payment. And I'm seeing that they're utilizing the time with no mortgage payment to pay off credit card debt or redo a backyard or do renovations at the house, right? And then they're seeing that these interest rates are fantastic and they're wanting to refinance. And we're having to say no. So let's talk a little bit. I think it's really, really important. So number one, if you're in forbearance and you want to refinance, you got to get it out of forbearance. You cannot refinance if you are in forbearance right now. Larry, why don't you give them something else that they've got to think about? Like a balance.
Like a what? I'm sorry?
Like a balance due.
Oh, so if you have a balance due, let's say you've been in forbearance for a few months, you're going to have to bring that account current. So you have to get it out of forbearance, number one. And then let's say you owe those 3 months, you have to pay those 3 months to bring it current. Now, it's not going to affect your credit report. Your score is going to be the same, but nobody will do a refinance for you until that account is current. So even once you take it out of forbearance, you must pay those back payments before you can refinance or sell your house and buy another house. You can't do that while you're in forbearance. So it's really important that if you need the forbearance, obviously you take it. You've lost your job, you're in trouble.
Absolutely.
Payments, by all means, it's the thing to do. Call them, call your bank and say, look, I need this, I'm in trouble, and they're going to work with you. But if you don't really need it, like Debbie said, don't take it because it's only going to hurt you. Because I had some guy I had to turn down the other day because he's been in forbearance for 6 months. And I go, okay, can you make the payments? Well, no, Well, I didn't work for 1 month. I go, what about all the other months? Well, I did work, but we spent the money on other things. So now he doesn't have the money to bring his account current, and he's paying 5% interest rate, and I can't refinance him. And he's like just miserable and sick with himself. I wish he would have called me first and got some advice, because, if you need it, but you got to be able to bring that account current. You got to be able to make all those back payments so that you can refinance. It's so important. Our government is good. They gave you the opportunity, but you have to be able to make it right. Otherwise, you're going to dig yourself a hole that you won't be able to get out of.
Yeah. So just think about that. If you're in forbearance right now and you really don't need to be, start working with your bank, call your bank, get yourself out of forbearance, do what you need to do to catch up the payments. Or so here's a couple of different options. Number one, you can pay those payments off, get it out of forbearance, and we can refinance you right away. Number two, you can work with your bank. You can get out of forbearance. They can move the payments to the end of the mortgage. And then you do have to make 3 monthly payments. We're talking 3 months in a row. No, you cannot make 3 payments in 1 month to get 3 payments made. We've got to see it reported to your credit report, payment made on time, all 3 months, and then we can do a refinance or a purchase. If you've been thinking about buying a home, we've actually have people that are in forbearance right now, selling their home. And their home is still in forbearance, so they're wanting to go and buy another property. And that just goes to show you that there are people that are in forbearance that do not belong in forbearance. Forbearance is truly for the person that was hurt
Right.
by this, epidemic. And, it's something that I get it. When it first hit, our interest rates went down, then they went through the roof, then they decided that they were going to make lending guidelines so tight that we didn't know if we were even going to do loans. There was a lot of fear when it first started. So there were a lot of people that jumped on it and said, I'm just going to do this to make sure, I'm going to be okay.
Yeah.
But as soon as you figured out you didn't lose your job, everything was okay. Everything's still moving forward. You're going to make it. You need to pull it out of forbearance, keep making your payments, get them caught up, do what you can do. So I did want to bring that up because I've just, this show is a lot of what I experience on the day-to-day. And for some reason, this week alone, I've run into that about 3-4 different times. And so, I just want to make sure that I'm bringing to you things that are happening, because if I'm seeing it 3 and 4 different times right inside of my own little office, my phone calls, that means that Larry's experiencing it and every other loan officer in the industry is experiencing it as well, which means that it's kind of a hot topic right now for anybody that is listening to the show and trying to learn and understand and get the advice. So do you have anything else, Larry, that you want to, add to that, or I didn't cover or touch on?
Not really. I just like to reemphasize that if you need it, take it.
Yes.
If you need help, by all means, take it. Nobody's trying to say don't take it, but just be conscious of your decision. If you're not sure, give Debbie a call and let her, give you some guidance on it. Maybe she can help you. Maybe you might want to refinance before you take the forbearance. Maybe do that ahead of time, and maybe that'll dig you out of the hole before you get into one. So it's always good to talk to somebody first before you make a decision on something like that.
Yeah. Oh, great advice, Larry. You guys can call and you can ask for Larry. I love it. All right. So everybody out there listening, Saturday mornings on Go Country 105, if you guys want to catch us live, you want to ask us questions. I know somebody had a question about all that stuff we talked about, all of the renovation loans and the forbearance and the loan limit changes. You guys got to watch us live. It's live at 5 on Wednesdays, right on YouTube or Facebook, Twitch, wherever you like to stream and follow. Please feel free to do so. We're on all 3. Make sure if you guys are on YouTube, you subscribe to the channel and you turn on your notifications. You got to hit that button twice so that you're selecting the all. And that way you'll know when we do go live. On Facebook, make sure you guys like the page and you actually follow. And that will make sure it lets you know that we're live as well. And one other thing I've got to ask you all to do, please, 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 is please give us a thumbs up on the video. If you've watched us this far and you're still on and following, you must like the information. So please hit that like button. It really does help our algorithm and definitely, gets us out there and lets more people see us and get the information.
And Helen on Facebook says, thank you, and I will be calling you tomorrow.
Oh, I love it. Thank you so much. Yes, very good. Helen, please ask for Larry. I'm just kidding. I'm kidding. Anybody, if you like Larry, call Larry. If you want to talk to me, that's totally perfect as well. It's all about you. But yeah, please, you guys. If and Dad's saying he doesn't see a like button. So Matt, I'm gonna let you call Dad and let him know.
Of course.
All right. Well, we hope that you guys all enjoyed the show. Really, if anybody has any questions, please throw them into the feed right now, and we'll continue to answer those. If not, we hope that you guys have a fantastic rest of your week. Make sure you call the office. Get on our calendar. That's what we're here for. We want to help you. It's 844-935-3634. That is the best way to know, get the questions answered and know what you can or can't do. Get a little bit better understanding. Anywhere you type in Mortgage Mom Radio, you can find us. If you go to Google and you put in Mortgage Mom Radio, you'll find the website. It's mortgagemomradio.com. You go to YouTube, it's Mortgage Mom Radio. Facebook, it's Mortgage Mom Radio. It's not hard to find us, guys. You can find us. You can find us on Yelp, whatever you need. And you guys, give us a call and ask us those questions. That's what we're here for. So I see Bosco says hi. That's fantastic, Dad. Thanks so much. He's talking about his cat. I hope everybody has a fantastic week. Larry, thank you so much for doing this last minute since Heidi wasn't feeling so good. She had a horrible, horrible headache, and I've had those before. They're not fun. But thank you again, really, and we'll have you on again.
Anytime.
And yeah, you're
I'll
awesome.
shave next time too.
I'll give you a little bit more heads up, like I told Carrie. I'll give her some heads up before I throw it at you. But we hope that everybody has a fantastic week, and we'll see y'all next Wednesday, live at 5.
Right.
I can't go yet. I got to tell y'all. Krista Hermance is going to be on. Krista is our trust attorney. Krista is amazing. If you want to know what the difference is between probate and trusts and a will
estates and wills.
and yes, she is going to answer it all, and it is huge. If you have a will, you're still going to probate. You want to know what probate costs? She's going to tell you it's not cheap. Get yourself a trust. So Krista is amazing. She is our trust attorney. She's going to be on next week to talk to us all about that. And if you guys, have any questions, we'll make sure that we get you her information as well. So, Matt, I think what I'm going to do is have you play Krista's commercial.
Okay.
And then you can finish up with our ending. And we hope you all have a great week. We'll talk to you later.
Everybody take care.
Do you own your home? Have you considered what could happen to your home if something happened to you and your family had to go through the dreaded probate process? Hello, I am the estate planning mom, and my name is Krista Hermance. I am an estate planning attorney at Hermance Law. If you own your home and something happened to you, depending on how title is held, your family may have to go through probate court. Probate in California can take an average of 12 months to 2 years to complete. It is very expensive and public. A will, while it states how you want your stuff distributed, doesn't actually avoid probate. It just guarantees it. If you want to avoid probate, a trust might be your best option, and we can help you figure that out. We have offices in Ventura, Westlake Village, Santa Clarita, and work with clients virtually throughout California. For information, text WILL to 474747. Again, text WILL to 474747.
This attorney advertising is intended for general information only, not intended to be legal advice, nor does it create an attorney-client relationship. Attorneys at Hermance Law are licensed to practice law in California only. You should seek advice from a legal professional licensed in your state. Hermance Law is located in Ventura, California, and can be reached at 805-518-9633.